Hey, welcome to Tesla Shorts Time Daily, episode 405. I'm Patrick in Vancouver. Today is March 12th, 2026. Here's what's happening with Tesla today. Tesla is ramping up Cybercab production to hundreds weekly at its Austin factory ahead of launch. Let's dive right into that. According to a report from Teslarati, Tesla is pushing hard on the Cybercab production line at Giga Texas, hiring more staff and installing new equipment to hit a target of hundreds of these vehicles per week. This is a clear signal of Tesla's commitment to its robo-taxi ambitions, as they're gearing up for deployment that could transform urban transportation. Why does this matter? Well, ramping up like this addresses some of the production bottlenecks that have plagued the EV industry, potentially speeding up revenue from ride-hailing services. For Tesla, it means turning autonomous tech into a scalable business, where the Cybercab isn't just a concept but a real product hitting the streets soon. And from a customer perspective, it promises faster access to affordable self-driving options, which could change how people think about owning versus sharing vehicles. It's an exciting step, but we'll need to watch how they handle the logistics of scaling that quickly. On a related note, shifting to regulatory developments, Tesla recently showcased its production Cybercab at the U.S. Department of Transportation in Washington. This happened during a federal forum on autonomous vehicle safety, as reported by TeslaNorth.com. Engaging with regulators like this is key for Tesla, as it paves the way for the approvals needed to roll out robo-taxis on a wide scale. It matters because safety standards are evolving, and Tesla's involvement could help set precedents that benefit the entire autonomous tech industry. From a business angle, smoothing out these regulatory paths reduces delays and gets the Cybercab to market faster, which is crucial for Tesla's growth in this area. Plus, it shows Tesla's proactive approach in addressing concerns head-on, potentially building trust with policymakers. I think this is a smart move, especially as volume launch nears. It's all about getting ahead of potential roadblocks. Now let's talk about a new project that's got some buzz. Elon Musk just revealed something called Macrohard, a joint effort between Tesla and xAI aimed at disrupting traditional software companies. As covered by Drive Tesla, this initiative uses AI to automate complex tasks, expanding Tesla's reach beyond just vehicles. It's interesting because it highlights how Tesla is building out its AI ecosystem, which could lead to deeper integrations in their products like better software for cars or even energy systems. For the broader tech world, this could shake up software firms by pushing automation efficiency to new levels, forcing competitors to adapt. From Tesla's standpoint, it's a way to diversify and strengthen their tech stack, potentially creating new revenue streams outside of hardware. I'm curious to see how this evolves. It's a bold play that ties into Musk's vision of AI driving innovation across industries. Switching gears to manufacturing updates from China, Tesla posted strong sales there last February, with 58,599 vehicles sold. Drive Tesla reported this, noting it's nearly double the previous year's figure, thanks to output from Gigafactory Shanghai. This growth is vital for Tesla's position in the world's largest EV market, helping to counter any slowdowns in other regions. It speaks to the resilience of their operations, with better availability for customers and possibly more stable pricing. On the business side, it reinforces Tesla's manufacturing edge, especially amid competitive pressures from local players. Overall, it's a positive indicator of demand recovery, which could support Tesla's global supply chain. Similarly, over in South Korea, Tesla's vehicle imports and registrations have surged early this year, fueled by growing EV demand. According to Drive Tesla, this is strengthening Tesla's sales footprint in Asia, diversifying revenue beyond their biggest markets. It's reflective of broader trends toward electrification in the region, which benefits Tesla's strategy for global expansion. For customers there, it means more options and potentially faster delivery times as adoption picks up. This kind of international growth is key for Tesla to maintain momentum in a competitive landscape. And speaking of expansion, multiple Tesla Model Y/L vehicles were spotted on transport trucks in Australia, signaling imminent deliveries. Teslarati covered this sighting in Melbourne, pointing to Tesla's push into offering larger EVs tailored to local needs. This launch caters to demand for family-oriented electric options, boosting Tesla's market penetration down under. From a product angle, it's about adapting the lineup to regional preferences, which could drive sales in growing markets. It's a straightforward but important step in making Tesla's vehicles more accessible worldwide. Now, on the heavy-duty side, a pre-production Tesla-xAI just completed a 4,700-mile fleet trial with impressive efficiency of 1.64 kilowatt-hours per mile. Drive Tesla shared the details, highlighting how this validates the Semi's potential for real-world trucking applications. For Tesla, it's about capturing market share in logistics by offering lower operating costs through electric power. This advances electric freight tech overall, helping reduce emissions in a sector that's tough to electrify. The data from this trial is promising. It shows the Semi can handle long hauls efficiently, which could attract more fleet operators. I'm impressed by the real-world results. It's a step toward making electric semis a practical choice. In other Tesla-related news, xAI just got approval from a Mississippi board to install 41 gas turbines for its Colossus 2 data center. TeslaNorth.com reported this, noting it's for powering AI operations, and while xAI is separate, the shared leadership ties it into Tesla's ecosystem. This infrastructure supports faster compute for projects like autonomous driving, addressing the growing needs of AI development. It underscores the massive power requirements for scaling AI, which is a challenge across the tech industry. For Tesla, it indirectly boosts their AI capabilities, potentially accelerating innovations in vehicles and beyond. One more from the manufacturing front. Tesla's Gigafactory Shanghai saw strong wholesale growth last February, according to Teslarati and CPCA data. This reinforces their edge in China, aiding global supply amid ongoing competition. It's a sign of robust post-holiday demand, which is good for the EV industry as a whole. Customers benefit from this through better production stability and inventory levels. Now, weaving in some competitive developments, Rivian's upcoming R2 crossover had its pricing leaked, starting at $57,990, which positions it as a direct rival to the Tesla Model Y. This reveal is creating buzz because it shows Rivian's aggressive push into more affordable EVs, potentially pressuring Tesla on pricing and features. From a market perspective, it intensifies competition in the midsize SUV segment, where Tesla has been strong. It's worth watching how this affects consumer choices and forces innovations across the board. Another one. Chinese EV makers like BYD, Chery, and Geely are planning to launch sales in Canada by the end of the year. This could shake up the North American landscape, bringing lower-cost options that challenge Tesla's dominance. They're navigating regulatory hurdles, which highlights the trend of global EV expansion. For Tesla, it means adapting strategies to stay ahead in markets like Canada. And here's an interesting update from Lucid. They're adding Apple CarPlay and Android Auto to their Gravity SUV via a software update. This addresses a big customer request, improving user experience in luxury EVs. It indirectly puts pressure on Tesla to think about similar integrations in their infotainment systems. It's a reminder of how software flexibility is becoming a key battleground in the industry. Now, one thing worth watching is an escalating challenge in Tesla's supply chain, a lawsuit over trade secret theft. As detailed in Teslarati, Tesla is suing a former supplier, Matthews, for allegedly stealing and selling proprietary tech to competitors over 3 years, and they're seeking over $1 billion in damages. This highlights vulnerabilities in partnerships, which could erode trust and raise costs if not handled well. It's a reminder of the risks in the fast-paced EV sector, where IP protection is crucial amid rapid innovation. That said, Tesla is well positioned to address it through strong legal action and by bolstering their safeguards, drawing on their track record of defending innovations. Taking a step back from today's headlines, let's apply some first principles thinking to how Tesla approaches vehicle software monetization. The fundamental question here is, how can Tesla sustainably generate recurring revenue from software without alienating owners? Looking at the data, Tesla's full self-driving subscriptions are bringing in about $300 million quarterly, but adoption is only around 20% due to high one-time costs and regulatory hurdles. Plus, the physics of over-the-air updates make delivery low cost, yet competitors like GM are bundling similar features for free, which shapes market realities. Tesla's approach breaks it down to basics. They design modular software that adds clear value, like enhanced navigation or entertainment, and use price tiers based on usage data for fairness. They also rely on iterative testing with real-world feedback to refine it all. The bottom line is this creates a steady income stream for Tesla while making tech more accessible, and it pushes the whole industry toward software as a service models and vehicles. Before we go, tomorrow we'll be watching for any updates on the Cybercab regulatory engagements, as those could signal timelines for broader deployment. That's your Tesla news for today. TSLA closed at $407.82, up $3.01, 0.7%. If you found this useful, a rating or review on Apple Podcasts or Spotify really helps new listeners find the show. You can also find us on X at Tesla Shorts Time. I'm Patrick in Vancouver. Thanks for listening, and I'll see you tomorrow.